Hi guys, Harry Yotis here. I thought I'd take a little bit of time briefly to talk about a trade that I did today. Today is Tuesday, January the 20th, 2026, okay? And the stock that I'm looking at is Innodata, okay? It's a very small company. I would consider it a small cap because it's a $2 billion market cap about. It is in the AI sector. It's an AI services, data services firm. It collects and trains AI algorithms as well as AI model deployment and integration services. It is very, very profitable, has 15% net margin, and it is in the AI space, maybe under the radar because it's not one of those big tech companies. And if you look carefully here, the earnings reports here, it always beats. Okay, it beat last earnings report Thursday, the 6th of November 2025. It beat by 75% on the bottom line. Previous to that, it beat by 79%. Before the 32%, a huge grower. Okay, big grower, and it keeps beating estimates. Okay, so that's why I like this stock. It is fundamentally driven. It is a fundamentally driven analysis that I undertake first, and then right after I identify that the company is doing well, fundamentally speaking, I want to look at the technical picture to see where to enter. Okay, so today I decided to enter because it broke this downward pattern going forward, and I suspect that the earnings coming up in February 19th will outperform. So what did I do? How did I structure this trade? I decided to buy an option structure for that expires in March. So I'm giving myself 2 months for this to play out. And what I did is I bought the $65 calls and I sold the $95 calls. Okay, this gives me a potential profit of $30, and for the cost of doing this was $7. So basically, I'm paying $7 per contract. So for one contract, it's going to cost you $700. That's going to be my risk. Okay, so whatever risk is appropriate for you, you have to decide. Okay, for me, it might be different than for you guys. It all depends on the size of your account and position sizing, which is very, very important. It's one of the aspects of trading that you should look after. Okay, so here I have a cost of $7 and a potential profit of $30, which is like, let's say, a 4-to-1 risk-reward ratio, which is my minimum. Okay, so I expect this to play out in the coming months, and hopefully it beats the next earnings report as it did the previous 5 or 6, and we get a move to the 95 level by March. So that's it, guys. That's my trade of the day, actually, for Tuesday, January 20th, 2026. If you have any questions, you could always ask below, comment, and I will get to them as fast as possible. And of course, if you like what you saw, like and subscribe. It really helps a lot. So thanks, guys. Talk to you later.